You are welcome to this part of this course. Thank you so far for staying tuned. In this video, I'm going to be discussing three major elements governing this strategy, and these elements are what we are going to be making use of throughout this video, throughout this part of this course. And what are the elements that we are going to be looking at, and what are the things that I'm going to be teaching you? I'm going to be teaching you how to define a price action setup. I'm also going to be teaching you how to define a market entry. And last of all, I'm going to be teaching you how to manage our trades once executed. Once we know how to apply these three major elements to our trade, we'll be on our way to making maximum profit from the forex market. Implementing these elements are very, very easy, and I'm going to demonstrate that to you. I'm going to demonstrate that to you in a market chart. Now let's go over to our forex chart, and let me show you how to implement these three major elements, that is defining a price action setup, defining a market entry, and managing our trades once executed. These three major elements are very, very important. For example, if you are a trader and you don't know how to define a market entry, you don't know how to define your price a price action setup. Now, if you don't know how to do these things, then you are in for a lot of trouble, because you end up gambling in the forex market. Now, even though you know how to define a price action setup and you also know how to define a market entry, there's another thing that is very, very important. That is managing your trade once it has been executed. How do you place your stop loss? Now, how do you place your take profit? How do you move your stop loss to break even? What price have moved in your directions? These are the things that I'm going to be discussing in a live chat, and I'm going to show you how to do all these things with ease. If you have this kind of information at your fingertip, then you will no longer be guessing. All you just have to do is to trade in line with the trend and make maximum profit from the forex market. Now on our chart, I'm going to show you examples of how to implement the three major elements that I've discussed about. The three major elements. Now the first number one major element is what? How to define a price action setup. Now before we define a price action setup, we need to first of all draw our trend line. Of course, our strategy is based on looking for a candlestick pattern along our trend line, and that is how we define our price action setup. Now, first of all, like I told you earlier, we will be making use of key swing points to define our trend line. We are not going to be making use of minor swing points. Minor swing points will not give us an accurate trade entry. Minor swing points will not help us to define our price action setup. Now, these are the minor swing points that I'm talking about. For example, if you look at this chart very well, you will see that this is a minor swing point here. This is a minor swing point. This is a minor swing point. This is a minor swing point. And so we have nothing to do with this kind of swing point. The reason why is because they lack momentum. There are very few candles on the left and they lack momentum. You can see this is a major swing point. This is a major swing point. The reason why I classify it as a major swing point, it has so many candles with momentum on the left, so many candles with momentum on the right. And so we will not be drawing our trend line like this or like this, because we don't classify those ones as a major swing point. So we'll be looking at key areas, key support areas. That is, if we are drawing a trend line, we are drawing a bullish trend line. Now, the first thing we need to do now is to define our swing point. Now, this is our swing point here. Why this is our swing point? Reason why I call it swing point, you can see many candles at the right, many candles on the left. There are more than 6 candles on the left. So how do we do it now? We draw a line connecting this swing low to this swing low, connecting this major swing point to this major swing point, and extend it into the future. Why are we extending it to the future? We are looking for price action setup around this trend line. That is based on our methodology. So you keep extending it as market progresses. You keep extending it. You keep extending it. Now we've extended it to the extent that you can see how price came and bounced off, forming what we call an inside bar. you can see what I'm talking about here. These two candlestick pattern, bullish inside bar. You can see that the high is lower than the high of this candle, while the low is lower than the low of this candle, forming what we call a bullish inside bar. So whenever we spot this kind of price action setup, we've been able to define our first element. Now, the next thing we need to do is to proceed to our second element. What is our second element? Defining our market entry. Now, our market entry is going to be based on this candle. Why this one is called the mother candle? Since this is what we call an inside bar, bouncing off from this trend line. So our entry will be based on this inside bar candle, while our stop loss will be based on this mother candle. So how do we do that now? First of all, you place your entry at the high of this inside bar, while the stop loss will be based on the mother candle. So if you measure the stop loss, you discover that is about 74 pips or thereabout. Let's say 75 pips. Now, if our stop loss is 75 pips, it means that our profit target will always be around 150 pips. That is where our profit target will be. That is number one. Number two, our profit target is also going to be based on any area of resistance. If, for example, now our stop loss is 75 and we measure it and we discover that our profit target is not up to 150 pips, then we will look to forget about that trade. Or if we see that trade setup is convincing enough, then we'll ignore our resistance area in the case of a bullish price action setup, and make sure that our profit target will be 2:1, because we want to make sure that our profit target is always higher than our stop loss. Now, if you look at this place now, our profit target will always be based on this area of resistance here. Now, our profit target will be placed around this area here. Now, if you measure it, you discover that our profit target is not up to 150 pips. So, and that is since our stop loss is 75, we are in the area of managing our trade now. Sorry, this is the third segment, managing our trade. Now, since our stop loss is 75 pips, our profit target will always aim at what? 150 pips. And if you look at it, if you measure it here, our profit target is our profit here is 105, and so we will not want to consider that area as our area of a profit target. So we want to look for another area of resistance. So if you look at this place, this is also another area of resistance. So having defined it, then you need to measure and see if it's up to 150 pips. Wow, 150 pips on the dot. And so this is the area where we'll be putting our stop loss. Here, be putting our stop loss around this area. That is 1.5410. That in this case, we have been able to define our entry. We have been able to manage our trade. Now, another thing is this: once price, for example, if your stop loss is 75 pips and price moves in your favor, all you just have to do is to price moves in your favor, let's say by 80 pips. All you just have to do is to move your stop loss to break even. That is from here to here, to protect that trade. And in that case, we are not risking anything, while we are going for a profit that is ×2 of our risk. That is ×2 of our stop loss. I hope you understand these three major elements I've just explained here. That is defining a price action setup, defining our entry, and managing our trade. I've just discussed how to manage your trade. Managing your trade, that entails how to define your take profit and how to move your stop loss to break even. Now let us look for another example to drive home my point. Now this is another example of a bearish trend line. Now, like I told you earlier, we'll connect two swing points. Now this is a swing high here because it has more than 6 candles on the left. 1, 2, 3, 4, 5, 6 on the left and also on the right. So it is classified as a swing point. This is not a swing point and this is not a swing point. Now it has momentum on the left and momentum on the right. And the same thing with this one. It has enough momentum on the left and enough momentum on the right. So therefore, we connect our swing points together. That is, connect this one to this one, and we'll now look for price action setup around that trend line. Now, so what do? we connect it and we extend it into the future. And let me explain one thing for you here. Now you can see that we've connected this thing together, and you can see how price came almost touching. You don't have to wait for price to completely touch this trend line, because the forex market cannot be perfect all the time. Now if you measure the number of pips to the trend line, you can discover that it's just 10 pips. So you cannot just miss these trades because of just 10 pips. So this is a valid price action setup. Now we've been able to define a price action setup. The next thing we need to do, the price action setup that we are seeing here is what we call an engulfing bar. Engulfing bar in the sense that you can see that the high of this candle is higher than the high of this candle, while the low is lower than this candle. So it is called an engulfing bar. And there's one thing that I want to also explain to you here. Let me highlight it. So you can see now, since the pips to the trend line is just about 10 pips, we also consider it as a trade setup. Now the next thing for us to do is this. We need to measure the stop loss and the take profit. Now if you look at this place very well, you discover that our stop loss is just 55 pips, because our stop loss will be placed at the high of this candle here, about 3 pips to the high of this candle, above the high, while our stop profit entry will be placed 3 pips on the low of this engulfing candle. So if you look at it, it's about 55 pips, and our profit target will be at the next or closest area of support. Now this is the closest area of support, and so we'll be considering our profit target around this area. Now like I told you earlier, our profit target should be a maximum of 2:1. If we are risking 55 pips, it means our profit target should be within the range of 100 to 110 pips. So how do we do it now? We measure our stop loss is about 59 pips here. It means our profit target will be around 118 pips. So if you look at it, is around within the range of 100 to 118 pips. So our profit target can adequately be placed here. So this area will be our profit target, this area of support. And this, you can see how price came, pierced it, and went up, pierced it, came down a bit and went up. So our profit target, our safest profit target will be here. In this case, we are going to manage our trade by placing our profit target at the closest area of support. Now as price moves in our favor, let's say by 55 pips, we'll move our stop loss from here to our entry price in order to protect our trade. Now that is how to trade this pattern. Now if you look at this place very well, we are going to draw another trend line here. We are going to draw a we are going to draw another trend line here, that is connecting. Now we connect this point here to this point. You can see another swing point has formed here, another swing point has formed here. So you pull up your trend line tool again and you connect. And what do? You extend it into the future and look for where price will, because you can see there are so many candles here, so many candles here. So this is a qualified swing point, and you can see what's happened here. And better still, you can still keep extending this trend line into the future. You can see. Now see what's happened. These two trend lines are very, very close. And see what happened here. Price first of all broke this trend line here. Now when price got to this second trend line, this one that I'm talking about, you can see how price formed what we call an inside bar coupled with what we call a pin bar. Now let me remove this trend line, because once a trend line is broken, it becomes invalid. Now look at what I'm talking about here. A pin bar coupled with what? An inside bar. Why is it classified as an inside bar? You can see the high of this candle is lower than the high of this candle, while the low too is slightly lower than the low of this candle. And we are seeing a double pin bar here, two pin bars here. You can see it's a very, very nice price action setup. And you can see what happened when price, now. Haven't defined our price action setup. The next thing for us to do is to define our entry. How do we define our entry? Our entry will be placed about 3 2 or 3 pips at the low of this pin bar, while our stop loss will be placed at the high of this pin bar. Now let us measure to see how many, what's our stop loss. Our stop loss is around 44 pips. Now it means that we'll be conventionally looking for a minimum of 88 pips take profit target. Now how do we go about it now? Like I told you earlier, our profit target will be at the closest area of support, because this is a bearish trend line. So this is where we'll be looking to take our profit, around this area of support. Around this area of support, this is where we'll be looking to take our profit. Now, and this area of support must make sure it has to be calculated in such a way that the minimum is 88 pips. Now let us see if it is up to 88 pips. Wow, you can see it is even 163 pips. That is more than 88 pips times 3. As you can see, our profit target is 3:1. We are just risking just 42 pips while we are going for over 164 pips. That is 4:1. Sorry to say 4:1. That is 4 times 4 is 16. That is 4:1. As you can see, this is where our profit target will be. Now you can see how price came and price breached it. Price broke it. Took us into profit. Now this is how to place your profit target. Now when price moves, this is as no, I told you our stop loss is about 42 pips. When price moves about 42 pips in your favor, the next thing for you to do is to move your stop loss to break even and protect your trade while price moves in your favor. You can see how price kept moving. Now we keep drawing this trend line because this is now a very strong trend line. You keep drawing it, and you can see how price reacted again around this trend line here. Now look at what happened here. Price came, this trend line has been tested how many times? 1, 2, 3. This is the third time that price is testing this trend line. You can see how price came here, bounced off, forming what we call a bearish inside bar. The inside bar in the sense that we have defined the price action setup. The high is lower than the high of this candle, while the low is higher than the low of this candle. So it is called an inside bar. An inside bar bouncing off from this trend line, and you can see. So what will happen now, we'll place our entry at the low of this candle, while our stop loss will be based on this mother candle. This is what we call our mother candle. So if you measure it, for example, our stop loss is here. Our stop loss will be about 2 or 3 pips at the high of this candle, while our entry will be here. While our entry will be around this area here. Now you can see, if we measure it, let us measure it to see how many pips now. This is about 41 pips. It means that our profit target will be around 82 pips. Now within the region of 82 pips. Now let us look at where we'll be taking our profit. Our profit will be based on the next available area of support and resistance. So this is the next area of support. Now our profit target will be here. Our profit target can also be placed at an area of resistance. This is an area of resistance here. This area. This is a minor swing point. We also consider minor swing point. This is a minor swing point. And so let us measure to see if it is within the purview of 80 something pips. It is not within. And so we reduce it. We make sure that our next profit target will be around this area here. So let us see how many profit pips we'll be targeting. Around 196 pips. And you can see price broke our entry and got us into the trade. Now once in the trade, the next thing for us to do is to look out for price to get to our profit target area. Now if you look at this price action setup very well, you discover that price did not get to our profit area, but price moved at about 98 pips. So like I told you earlier, Whenever you see something like this, you move your stop loss to break even. When price moves 40 pips in your favor, because your stop loss is around 40 pips, you move 40 pips, you move your stop loss to break even to protect your trade. Now, had it been the fact that you did not take your trade, you did not protect your trade, price would have gone against you. Now, another thing is this. You can also be moving your stop loss by 40 pips, since your stop loss is 40 pips, to protect your trade. Had it been that you have done that, you would have made some pips made about 40 pips from this trade, about 40 pips. Now, this is how to manage your trade effectively and efficiently. Now, if you also look at this area now, if you keep drawing your trend line, you discover that this trend line is no longer valid, because why? Price has broken it, compromised it, and it is no longer valid. So since it is no longer valid, what do? You take it off and look for another trend line to consider. So therefore, that is how to execute the three major elements governing this course: defining a price action setup, defining our entry, and managing our trade once our entry have been triggered. I hope you've been able to learn something from this price action course, from this strategy. And one thing I want to assure you is that if you implement this system as I've explained it, you are going to make a lot of pips from the forex market. Thank you for taking your time to watch this video till the end.